G'day traders, it's the 24th of Jan and most of you, I'm hoping, are back to trading for the year. It's possibly the best time to be back. Markets are stable and our strategies are as well. So jump straight back in. I'm going to try and do a weekly review video and start pointing out various things on the charts throughout the week. Most likely, most of it will happen on Monday or Tuesday Australian time. Um, now, I'm going to try and stick with Forex more so than binary, but I will point out different areas where you could possibly start taking binary entries. And most of these videos will have themes that I have spoken about in the past. So right now it's just kind of reassuring, re-putting together all of that information in past videos, so you subconsciously and consciously are able to start pointing out and start seeing things on your charts. Now, before I jump into this, I'd like to do a shout out to Shiza Scott. She knows who she is. I just got off the phone with an amazing person. She's a trader who's starting to develop her own strategies. You know, when I say make this your own, take whatever you're learning from this, start staring at charts and let the market and the charts speak to you. And when you do that, you will start to notice things that are happening beyond your indicators or beyond what you've been told by other people. And then that's what you follow. That's your intuition really talking to you. And Shiza, again, she's been amazing, and you know, I'm excited. I've got a smile on my face. The whole time I was speaking with her, I was smiling because she's absolutely brilliant in taking a little bit of information and then creating something beautiful out of this. So that makes my day. That makes my time and the videos and stuff that I put out there absolutely worthwhile. Thank you, Shiza. It's for me, this enriches my soul. Thank you so much. I encourage the rest of you to please do the same thing. Never give up on yourself. Never give up on trading, because all of this, it's bloody simple. I can't stress enough how simple all of this actually can be, and I'm trying to make it as simple as I possibly can in the videos. Okay. All right. So let's get back into this. I've got all my currency pairs open, all on 15-minute charts. I again prefer all my pound pairs and CHF pairs, but I've got other currency pairs there open as well, and we're going to talk about correlation here as well. Now, the first thing you do is this. Pound JPY, you look at your charts very briefly. If there's anything that's standing out to you, look into it further. If it's not, then you move on. If it's choppy, move on. I'd like to stress upon the EMA 50, EMA 200 cross strategy, because that's by far the simplest one that I have ever come across when it comes to Forex trading. And so we're going to go through the chart, scan them, and see if there's opportunities. Where would we have entered? Why would we have entered that? When and how would we would have predicted a possible move in that direction? So pound JPY, choppy sideways market. There's no cross of the EMA 50 and the EMA 200. Okay, a lot of people are trying to preempt a move, and they will start to look at jumps happening in the market. For example, people will look at this and say, okay, I'm going to do a put trade on the next candle because this has hit the EMA 200 and the EMA 50 is about to cross. I've received screenshots from people there. Please follow the strategy, guys. It's at no point in there where I'm asking you to preempt this. You can predict a move and say market may come down here, but this is absolutely nowhere an entry for you. Okay, what we want is the market to actually have established criteria for you. So you want your EMA and EMA 50 and EMA 200 to cross. Then you want EMA 50 to come below, in this case, somewhere here. Then you want price to come and hit it before you start looking for entries. So if you have a casual look and you say, okay, EMA 50 is coming down, EMA 200 is kind of flat at this stage, I don't see anything. We're going to come back in half an hour, 45 minutes, just to have another quick look. Okay. So in this case, nothing. Market is choppy. If you're seeing with any of the currency pairs a lot of wicks forming for Forex purposes, jump onto your next one. Okay, next currency pair. This isn't the sort of market you want to trade in. For binary purposes, sure, you could draw your support and resistance lines in and look to see if you've got any nice decent entries, because there's every chance that if you get your support and resistance in proper, you might end up in the weak space and win your trades. Okay, so quick glance, nothing for us to trade. Okay, when you see this sort of behavior, some of you might be looking at this and saying, this is a bit of a massive W formation. This is happening towards the end of the New York early Asian session. For the life of me, would not be looking for entries around that time. Volume is quite low. In this case, the market has moved significantly. Say for instance, even from here to here, I still wouldn't even bother about it. Okay, because you'll get better, easier, more criteria strict entries much later on as well. Okay, pound USD. All right, in this case, there's no cross of the EMA 50 and the EMA 200, although, you know, there is opportunities where price does come and bounce off the 50. Again, they're possibly not worth your time, simply because, one, we want to keep this as simple as possible. Two, the market, for it to actually move any degree in pips that we're looking for, you'll probably be sitting in front of your computer or have a live entry on a trade for like anywhere from a few hours to possibly longer. Avoid that entirely. AUD JPY. Okay, so this is a nice setup. We've got a cross, a very clean cross from EMA 50 coming under below the EMA 200. Now this is exactly what I mean. Let it happen. Let price do its thing. Price then consolidated and it started coming back up towards the 50. Now here's the thing. Here's where a lot of people also begin to make a mistake. They'll begin to ignore all of this and they'll say, okay, Shiva, this is starting to look like a bit of a W pattern for me. If you forget this bit here, you can actually see a W here. This is the first wave. Okay, this would be second wave, third, coming down, and then fourth. We're also going in towards the end of the Asian session, early London session, right? Just off this behavior, I wouldn't be cocky enough to trade that, right, in this strategy. So what we're doing is this. We're starting to predict a couple of things. When we see this cross happen, we know that at some point, price is going to come back and commune with this EMA 50 line at some point. When exactly, we don't know. But we can predict how close to, excuse me, we can predict how close to this EMA 50 line the market will go, and that's purely based on the behavior of candlesticks here. Okay, so what we can do is this. We start to first see that towards the end of the Asian session, price stalls. Okay, so we're going sideways. This is a consolidation market. Then market goes up, comes back down, and we get issued with a long wick at the low of the Asian session. The body of it didn't come down and break and close below the low of the Asian session. It created a nice decent wick. This would have been like a stop hunt. And then this candle pushes aggressively up above that, right? Now, whilst this candle is in motion, we know that there's every chance now, it's confirmed, that price will come back and hit and commune with the EMA 50, right? What we can do is this. From whatever point in this candle the market's at, draw a line straight up using your crosshairs till where the EMA 50 is, okay? That gives us something close to about 20 pips. Now, wherever this finishes off, you now have an opportunity to capture, possibly at the bare minimum, about 15 pips given spreads as well. Okay, so let's calculate that. From the start of this candle till here, that's 15 pips. So given spreads, you'll probably be making 12 to 13 pips or so. Now, that's an opportunity for you to consider whether or not you want to capture those pips. But for binary traders, you also have an opportunity to say, okay, I now know that there's every chance that this market's going to come and hit and commune with the EMA 50. So I'm going to look for opportunities going north. Okay, you could do a trade straight off the open here, or you could look for a bit of a pullback. Now, if in this case there's no pullback, you don't trade it. Okay. Whether or not this market is going to go up above the EMA 50 and then go hit the EMA 200, we don't know. There's always a possibility of that. The possibility is always either price is going to come back around, hit the EMA 50 or the 200. The 200 is less likely. The EMA 50 is highly likely. We know this is going to happen. So in this case, your aim would have only been up to here. It wouldn't have been up to here. Okay, so where the market starts to stall on the EMA 50, market consolidates, this heavy fall happens, we don't take this trade straight off. A couple of reasons why. Okay, the first one is that I don't actually see a clear pattern. You could look at this and say, okay, a bit of an M pattern, but every time there's a significant move in the market, it's not going to be such a tiny setup, right? The other thing is the time of when this is happening. I'd look to see if there's any news releases happening, because you know that the market makers, the big massive institutions, what they'll do with the news is they'll use the news to establish structure, right? So if there's news around these times, you're looking for aggressive moves, because that is there to establish structure, right? So either stop hunts, or it's either, you know, the false move in the market. So what we're looking for now is, straight after this, we'll say, okay, I don't know what the market's doing. Plus, here's another thing that you really want to note, is that at any point in time you see a big aggressive candle, there's a lot of volume going in there. Usually that volume can be accompanied with false moves, right? So what that means is there's going to be a tiny reversal that happens. In this case, we've got a decent sized reversal that's happening. Market goes up and then consolidates, stalls again, right? So you would have, if you would have taken your forex trade or your binary trades, it would have just been on these couple of candles, and you would have exited your trade as soon as the market hit the EMA 50 here. Okay. Now, why would we not have done a long trade for a longer period of time? Because the EMA 50 crossed below the EMA 200 here. We're only looking to short the market, realistically. For more of the savvy traders, sure, you can actually trade this move here as well, okay? But if you want to stay safe, you want to stay very consistent, you'd avoid all of this, but you will begin to predict what the market's going to do. And I would be predicted the market will go somewhere here. Now, this is middle of London session, so it's, I don't want to trade that. It's highly unlikely for the market to automatically move going south in the London session, especially when you look at currency pair. The Aussie and the Japanese markets are closed right now. Okay, so what we're waiting for is somewhat of a move where the market's going to come back into New York session and then do another false move up prior to coming down. Again, we don't expect that the market's going to push all the way up to the EMA 200. When it does, and I'd probably be away from my charts, come back towards the open of New York. So I probably would have come back somewhere around here. Okay. This is going into the first 15 minutes of New York, so I would have come back somewhere around here and thought, okay, market did push up. I've got a nice, beautiful wick to the EMA 200. We've got a consolidation happening for 15 minutes. Okay, this candle did not break past this point here, and then an aggressive move south. My prediction back here already was that this market's going to continue going this way. We were waiting for it to come and hit the EMA 50, and then we're looking for entries, right? This was a beautiful entry. We take our trade straight on the open of the next candle. Okay, so in this case, say for instance, if you're aiming for your 30 pips, you would have had 30 pips in 2 candles, you're out. If you're chasing 50, okay, in about an hour and 15 minutes, you would have had your 50 pips with AUD/JPY, and you walk away. Trade's done. Okay. Here's the other thing that I want you to take note of. When you've got this sort of an easy move, easy behavior setup happening on one of the currency pairs, I want you to start looking at correlation with other currency pairs, all right? So in this case, we know that AUD/JPY has correlation with Pound/JPY. It will have correlation with Euro/JPY. It will have correlation with CHF/JPY. In most instances, USD/JPY possibly will have similar or the opposite correlation. And the reason for that is that this particular sort of move, we're not sure if in this case the US dollar was falling because the yen was stronger, or was the US dollar falling because the US dollar was weak. Maybe Donald Trump opened his mouth and he said something. We don't know at this stage, right? So if there is any degree of fundamentals having an impact on this, then so be it. So what we do is we go back to pound JPY, and we've already established that this is too choppy. We don't know what the hell we're going to do with this. Pound JPY, we already are familiar with it. Let's go see Euro JPY and see if it's doing the same thing. In this case, the cross of the EMA 50 happened much later into the Asian session. Market consolidated, came in at the middle of the London session, bounced off, and you could possibly have traded this. Again, if you're doing your 30 pips, let's see if we get our 30 pips. I would have waited until this candle here to enter. This one's nice, but I need the market to move a little bit more to give me confirmation that I'm going to be able to jump into a comfortable trade. So I'll enter here. Let's see if we get, okay, we've got our 30 pips right before the market pushes back up again. So you would have exited at any point in time once your 30 pips would have hit. Now, one thing to note is this. Remember I said in past videos that even if you get it wrong, say for instance in this case, I probably would be only chasing 30 pips simply because at this stage there's no established pattern. The only thing I have is where the EMA 50 is crossed below the EMA 200, and I'm expecting price to come and commune with the EMA 50. That's all I have, right? So that prediction happens more often than not, but that's all I'm actually banking on at this case. So I'll probably bring back down what my required number of pips are. You could do 50, you could do more depending on currency pair, but in this case, apologies for that loud truck outside, but in this case, you would have hit your 30 here, and you would have been done. So if you were to count these ones here at this stage, you're doing 30 to 50 pips. Say for instance you did 30 pips in the New York session for AED JPY. Euro JPY, you did the analysis and you were able to take this one, you do 30 pips. You come back later on and it's doing exactly the same thing that AED JPY did at the start of New York. Okay, market pushes up, quick to the EMA 200. Binary options traders, you could possibly have taken your put on this candle as soon as market hit past that. Let's see if we've got any. Okay, we'll take this as the low. Okay, here's your 78.6 line. So at any point in time when beyond the EMA 200, you could have taken a put. Okay, this is just an added confirmation where even if the price would have gone all the way up here, solid green candle, I would have expected it to come back and possibly sit firmly on the 78.6 line. In this case, it went lower. That's okay, but we would have still won this trade on here. Okay. Now, straight off of that, as we did in AED JPY, you take your entry here, not here. Okay, too many people are taking in their entries for Forex too early. I know many of you are kind of eager to get your pips in. You'll say, okay, shit, I lost 18, 15 pips if I would have gone in earlier. But in this case, wait for the confirmation, wait for the market to move aggressively back, and then you take your entry here. Okay, 30 pips again, we're trying to reach. In 2 candles, it's done. So that's 60 pips, AUD JPY. Euro JPY, actually no, 90 pips if you would have taken this, this, and this. For those of you that are only chasing 30 to 50 pips, you're done for the week. Okay? Correlation. CHF JPY. Cross happens in early Asian session. Market comes back, hits our EMA 50. We've got tiny doji hit to the EMA 200, which is absolutely beautiful. And here's the other thing. If it hits the 50, in most instances it will. It's great for us. We're looking for an entry there. But if it goes back and hits the EMA 200, it's a beautiful trade. You know, you could pass on the 50, but if it's hitting the 200, don't pass on it. Take that trade. So in this case, I'll wait for this candle, and this candle to finish doing what it's doing. If you really wanted to, I'd even wait for this candle to finish what it's doing. Just in case, because sometimes what you could find is where, because it's the middle of the London session, that market may stall just on the EMA 50. It might even bounce off slightly, but this will give you an indication. I would jump in on this red doji here. Here we go. 30 pips or 32 pips or so here, the 35 to the bottom, but you could probably get your 30 pips here in 45 minutes to an hour. Okay, That already is 120 pips we've got there. Market goes back up. Now this, you could count as your M pattern, goes and hits our EMA 200. Another possibility of, actually let's do our fibs there, another possibility of a binary trade. Okay, look at this. Remember when I said earlier that when I draw my fibs in, market goes, hits my EMA 200 and goes above. You take a put on that, especially because EMA 50 is below, so we're expecting this market to be coming down. Take a put on that. You would have won that on the week. Notice how price comes down, sits firmly on my 78.6 line. That's the expectation. This is what we were talking about with Euro JPY here, that it's 78.6 was somewhere here. Okay, so it did do this with power CHF JPY. You wait for this to push down. Now this push happened earlier than oh, the mic's falling out. This push happened earlier than the open of New York. If you wanted to wait. You could take your entry here, but you can wait till New York formally opens here, and then count your 30 pips. Now CHF JPY, that moves beautifully as well. Okay, and in 45 minutes we have another 30 pips. That's 150 pips. Going into USD JPY, let's have a look at this. Behavior is exactly the same. Okay, so you could take your entry off of here because there's every chance that a correlation for USD JPY in this case was positive with AUD JPY. So you would have known cross happened very early. I could probably even count this to be a cross on Friday. I don't know why I've got that box there. But this cross happened earlier, price came back, hit middle of London session, consolidated. You could possibly even look for an entry here if you wanted to. Okay, that's about 20, right there's 29. At the bottom of this little doji here is 30. Okay, so you could have taken that entry if you wanted to. Yeah, to stay safe, let's just be consistent. Hey, Shazza. You could be consistent there with all the other ones where you see your entry and you take that trade. Just below here, you get your 30. What's that? 180, I think. But we'll wait for this. This didn't hit the EMA 200, but it's pulling back USD JPY. We take entry. You could take entry there. I take entry here, and let's count another 30 pips. Okay, 30 pips you've had in 2 candles. Okay, so one very simple setup strategy: simple cross EMA 50 and 200. Price comes back to commune with the 50 or the 200. Candlestick behavior. Study that in depth. So this behavior here, and then look for correlation. Okay, it'll only really take you a few minutes, I'd say 5 minutes at max, to analyze just that. Forget everything else that you know. And we've got, just with 4 currency pairs, we've got over 200 pips, and that's just if you were to stick with you know, your goal 25-30 pips at a time. Okay, all right, that's it for this week. What we're expecting with all these currency pairs, actually let's just quickly look at AUD USD. Okay, well there's no actual cross this week, so we'd avoid it so far. No cross here as well. USD CHF, no cross, was well and truly out there. Enter last week. You could actually use the crosses last week as well, but I want to keep this strategy so simple that if you see the cross happening this week, then that's when you can start looking for entries. Okay? Okay, pound NZD and pound AUD, again, no crosses. We'll avoid them. Cross would have been way into last week, so we'll avoid that as well. Okay? Master this trade, and then we'll jump into how to trade all of these things. Okay, that's it for this analysis video. All the best, guys.